Hi, so you've asked and it's finally here, my Teqnion valuation video. Merry Christmas, I hope this entertains you on your holidays. If it does, a Merry Christmas like and subscribe would be really nice. Now, I normally start a valuation video with the industry, then the company, then the financials, and then I look at management and then do the valuation. But I have to start with management here because I went to Stockholm to meet Johan and Daniel and had a fantastic morning with them. My interview with them is here on my channel, by the way. And look, these guys they're just great guys, and I couldn't think of a better pair to run the business. Johan is just far too humble to say this because it is a team effort, but he's the heart of the business. If he left, this investment would change dramatically in my eyes, so there is some key man risk. It is something to think about. So it's funny. So I've done a lot of analysis of this business. I've poured through the financials. I had annual reports translated and read them all. This was important to look for. It was important to look for all the red flags. So it definitely helped. But after all that, the actual decision to invest and the valuation was actually pretty simple. Oh, and I better quickly explain Teqnion for those who don't know what I'm talking about. So Teqnion is a serial acquirer in Sweden, one of many serial acquirers out of the Scandinavian countries. Now, a serial acquirer is a business that buys other businesses as a major part of their growth strategy. And sure, there is some organic growth from these businesses that they acquire, and that makes a great bonus, but the idea is to buy good, solid businesses at, say, 4 to 6 times profit and continue to run them. The cash flow that these businesses generate goes back to management to fund the next acquisition. 1 turns into 2, which turns into 3, turns into 5, into 8, into 12, into 15, and so on. So the compounding and snowballing effect of the acquisitions makes just more acquisitions. Many companies have proven this works, like Constellation software, and some companies have destroyed value by attempting this strategy. Now, you have to buy great businesses, otherwise things get ugly. And a key to a good serial acquirer is they have extremely competent, high integrity, not greedy management. And there are plenty of them out there that are high quality. I looked at Lifco, Green Landscaping, Indutrade, Lagercrantz, Instalco, Vitek Software, and they all are really good companies, but the standout in my eyes was Teqnion. Now, I bought my Teqnion shares with my Interactive Brokers account. There's a link in the description to check out a demo account to see if it's for you. It's great that Interactive Brokers give me access to Teqnion, as this could be a life-changing investment. At least I get access to most of the world's stocks, not just American, like many of the brokers out there. Now, Teqnion has a diverse mix of businesses. Think of a table with 24 legs. A few could be broken, yet the table will still stand strong. As more legs are added, the stability gets even stronger, and this is how a good serial acquirer can be a really low-risk investment. So I think Teqnion have reached a point where they have discovered some great high-quality deal flow for new acquisitions. This is what Johan and Daniel spend a lot of time doing, sourcing deals. I think they are getting better and better at this, and the compounding effect of doing this for over a decade is really showing. Now, Teqnion are funding new acquisitions with cash and some debt. They don't like the idea of issuing stock for acquisitions, and I like this. It shows respect to the shareholders. I understand that some serial acquirers like to incentivize new acquisitions with some stock. That can work as long as it's not excessive. But I like how Johan and Daniel build emotional relationships with the acquisitions. They welcome the new businesses into the family. They take the pressure off and give them real support. And on a side note, I know Mike Creedon at SDI Group does this as well, but I'm digressing. Teqnion hit all of my criteria for what I'm looking for in an investment. They have smart, high integrity management that have a very long-term mindset. They have a long runway to compound further into. They have good growth rates and reinvestment rates. And the focus is on reinvestment and growing the business. 32% earnings per share compound annual growth rate for the past 6 years, and a goal to double the business every 5 years, which is the same goal as KPG, by the way. Anyway, I could go on and on about Teqnion and the business and the management, but I think I should just jump now to the valuation. You can watch my interview on Johan and Daniel for more about that stuff. So let's start with a nice simple way to get a ballpark estimate. So for a company growing at well over 25% per annum, a PEG ratio, which is a price to earnings per share to growth, made famous by Peter Lynch, well, fair value would be a PE of 25. The PE is about 20 right now. Now, I don't love the PEG ratio because it assumes growth is just going to continue plowing along at whatever rate, I guess. And that isn't how businesses work. So I've run Teqnion through just a profit margin calculator here. And what I've done is I've got the current revenue and the 5-year revenue growth rate. This is what they're targeting. And they've been doing, like I said, 25% earnings per share growth, but let's assume it's just going to come back a little bit to 15% because maybe the acquisition prices get a little bit higher. Maybe organic growth slows down. Maybe there's a recession somewhere in those 5 years. 15% I think is a pretty conservative, good level-headed place to be. Then I've got the estimated free cash flow margin of 9%. That's generally what their business runs at. So they're turning 9% of this revenue into free cash flow. And a fair future free cash flow multiple is at 20. It's about what it is today. I think that's fair for a company growing at 15% per annum. Could easily be higher than that, but let's assume no let's assume no multiple expansion. The dilution rate, they're not going to dilute shares anymore. Shares outstanding number and the current market cap is telling me that in a 5-year time, we should have a target share price of 260. At the moment, it's about 130, so about a double from here, which is 16% compounded annual growth rate for the next 5 years. And then I can run it through a discounted cash flow model, and it looks something like this. This is if I'm more conservative and chasing a strong margin of safety. So what I've done here in the DCF is I've put in growth rates of 15%. Now remember, they've been 25% for 6 years now, but I'm just saying that because their acquisition engine is buying things at 4 to 6 times, maybe they don't get much organic growth and maybe only 15%. That's pretty conservative, I think, considering their history and where I think this is going, but that's okay. I've got my discount rate in there. I'm aiming for 15%, and I've got a big margin of safety built in. That's why I'm aiming for 22%. The multiple I could sell it for is just the same multiple it is at the moment. And I think that's fair for a serial acquirer growing at these speeds. So then I've got just the free cash flow, the shares outstanding, and the net debt figure here at the moment. And it says that I'd want to buy this at around about $82. So that's in Swedish krona. So I think the share price at the moment is like 130 or something like that. So this is saying that I'm not there with my DCF at the moment. So I'm definitely not getting a crazy bargain or anything, but we are definitely somewhere around fair price. And although I love a bargain, getting what I think is a wonderful company at a fair price is something that I am happy with. This is, of course, not a sure thing at all, but I love the business model and I have a lot of confidence that they can continue doing the same thing in 10 years' time. The runway, I think, is really long. The risk is if the board of directors replace Johan or he leaves or something dramatic like that happens, that appears unlikely considering that he has been doing such an amazing job for 13 plus years now. So valuation of Teqnion isn't a big hurdle for me. Of course, I would like lower prices, but this is a hold forever type investment for me. I will work to add more and more over time, as I think this is going to grow at least 15% plus for decades, and well, paying fair value is actually pretty cool. Now, if you haven't been following my channel, which is about 20% of the people who will be watching this video, I hope you enjoy my style of investing videos. And since you are new, this is what I'm looking for. I'm looking for a company that has a lot of growth with high internal rates of return, companies that have a long runway in front of them. So it'll need to be a smallish cap company. And I'm looking for great leadership with a high percentage of their net wealth tied up in the business. And if you know of a business that fits these three things, please share it with me. I'll even dig into it for you and give you some feedback. Please give me a rough elevator pitch though, and because that will help me get started. And join my Discord group in the description to share that idea with me and we can chat in there. Thanks for staying to the end of this video. I hope you enjoyed and see you next time.